welcome to Estate Edu with Atibami. In this lecture, we begin with the principle of valuation series with a deep dive into the concept of value. Whether you are an estate management student, an aspiring valuer, or you're just curious about real estate investment, this video will help you to understand the meaning of value, its importance, its types, and real life application of valuation in the property market. Having said that, let's welcome our lecturer. It's no other person than ESV Atibame Dan, the principal partner and CEO of Atibame and Company. You're welcome, sir.
Thank you, Aisha. In this series, we'll be looking at value and its concept, the various types, then valuation and its methods, the relevance or importance of valuation to property in estate management. I'm talking about value. Value has to do with the worth of an article, the worth of an asset, or the worth of anything that is tangible or being handled, which we call property. So it's the worth of that item that is expressed in monetary term that we call value. So value simply means the worth of an article, worth of an asset that is expressed in monetary term. And when we talk about value also, we have different type of values. We have moral value, we have physical value, we have religious values. But the value we will be considering in this case is value as it relates to estate management. When we talk about value as relates to estate management, we are talking about the various type of value, which include market value, mortgage value, rental value, insurance, forced sales value, book value, salvage or scrap value, probate, compensation, and the rest. So when we talk about each of these values, we explain them like market value is that value that is determined through the forces of both demand and supply in the marketplace. Mortgage value is that value that a lender is willing to give out to a borrower. In this case, we are talking about someone who is taking a loan from the bank for mortgage purpose. So that value that the bank is willing to advance to the borrower is what we call mortgage value. We also have rental value. Rental value is that value of a property that is being generated through rental incomes on a periodic basis, either monthly, annually, or through lease. That is rental value. We also talk of insurance value. Insurance value is that value with which the property is insured against risk and losses. Then we have forced sale value. Forced sale value is that reserve value a lender below which a lender will not advance loan. Forced sale value also means that forced sale, the value of a property under duress. Duress means that there is no time for normal market understanding, normal market information. They want to sell this property under duress within a very short time, because sell it as quickly as possible. That is the forced sales value, and usually take place where there is a foreclosure situation. Then we have book value. Book value of a property is to do with the economic and accounting value of a property. And the salvage value, which is also known as scrap value, is that value of a property that has become zero by accounting books, but then still have some usefulness and utility, even after its value has become zero in the book. And therefore, we call it scrap value or second-hand value in the Nigerian parlance. We have probate value. Probate value is that value of a property that the court will rely in administering the estate of a deceased for inheritance, for estate administration. And then lastly, but not the least, we have compensation value. Compensation Value is that value that is paid to a claimant in the event of compulsory acquisition of property, in the event of government taking over with their power of domain for public purposes. When this valuation is assessed, the value attached, the value raised is what we call compensation value due to the claimant or whoever is injured in the compensation exercise.
All right, sir. Thank you very much. Having explained what value is and the type of various type of values existing, how do we arrive at these values? Are there specific methods for each value or
Thank you. In arriving at these values, whether it's probate, whether it's compensation, rental, mortgage, or whatsoever value you want to adopt, there are specific methods of valuation. Valuation itself is the process of estimating the value of a property. And so there are methods that are used. Those methods include market comparison method, depreciated replacement cost method, which is also called costs or contractors method. There is residual method and profit method. Each of these methods will be explained briefly. Comparative method has to do with comparing an existing property under valuation with other properties, similar location that have had transactions carried over them. We compare them, but having allowances and for variations in terms of age, location, and the facilities provided in the property, adjusting it to conform and compare with the subject property under valuation. That is the comparison method of valuation. We also have depreciated replacement cost method. Depreciated replacement cost method has to do with replacing an old with a new building. For instance, when you have an existing building which is old and you want to value it, and because there are no comparable evidences around, we rely on this depreciated replacement cost, which means building this same type of building today with the current prevailing costs of construction and then depreciating it to the level of the existing property under valuation. That is, whatever you get with additional cost of land, land value, and the rest will be the depreciated replacement cost method valuation. Then we also have profit method. Profit method has to do with properties that have business transaction operations, businesses like hotel, restaurants, and so on, that are being operated. The method adopted in valuing such properties is a profit method of valuation. Lastly, we have residual method of valuation. Residual method of valuation is that valuation that is carried out on a property that has potentials for further development. It's done based on the potentials derivable from that particular uh, property. Then lastly, we have investment method of valuation. Investment method of valuation deals with forecasting the income generated from the property over time, bringing the cost to as at today. That means discounting the value of the income expected from the property until today's value, based on the right return on investment rate, which has to do with the percentage of returns. So this percentage of returns is capitalized by with the value of the either rental income or whatever income is generated by the property. So these are the core methods of valuation that are applicable in determining values of properties.
okay, sir. Thank you very much. Haven't talked about value and valuation and its method of application. How do we apply it to our daily activities? What are the importance of this valuation to the society or to the economy?
Thank you. There are so many importance of valuation as well as the relevance of valuation in day-to-day activities, day-to-day transactions. Number one, valuation helps in investment decision making. For instance, if you want to go into taking decision on either to buy land or to sell land or to invest in developing uh, land, the first thing you need is the valuation opinion of experts. These valuation of experts will guide you in taking decision either to go into the investment or to other source of investing your finances and capital. Another importance of valuation is to is that it enables lenders, for instance, bankers who are into giving out loans for mortgage purposes or for business transactions, to know the limits of their exposure to risks. So when a valuation is available, it guides the lender on the quantum of amount to be given out in terms of loan to developers. Valuation also helps in presenting a fair market transaction. Fair market transaction, fair open market, information is available through valuation uh, processes, because when there is a fair market transaction, everybody is aware that this property commands this value, and then based with comparable properties available, every party, whether you're a buyer or a seller, is aware of the true market situation. And there's also transparency displayed in the valuation to be provided. In addition to that, it provides regulatory compliance because valuation is required where there are disputes. I mean, in terms of taxation, it helps you to know the exposure of your tax obligations from the government and to the government. So it's also important. And then, of course, valuation helps in dispute resolution. When there is dispute between a buyer and a seller, valuation comes in handy in order to provide an alibi, provide information, provide necessary evidence in order to solve the dispute. And of course, also when there is dispute between a property owner and the government agencies, valuation comes handy as well in order to provide information that will help guide each of the parties in the dispute. And of course, lastly, valuation is important because it helps in knowing the feasibility and viability of any project that is being contemplated. So in decision making, valuation is important. In risk management, valuation is important. Market situation, market transparency, valuation is important. Dispute resolution, valuation is important. So we say valuation is very critical and relevant in all our daily activities.
Thank you very much, sir. I appreciate your time. But can you kindly give us examples of, because you mentioned book value as well as scrap value, and there are some other values you mentioned earlier. Can you give us an example to each of those values?
Okay,
Thank
thank
you.
you very much. Specifically, when we talk about book value, is accountants who always tell us that every asset has its lifespan. We agree with that. However, when an accountant is dealing with a property that has its life lifespan, I will give you a practical example. For instance, a vehicle is bought for an office. A vehicle that is bought for an office may have a lifespan determined to be for 10 years. When this vehicle, for instance, that is bought at 10,000 naira, for instance, should have a lifespan of 5 years. It means that every year the lifespan depreciates by 2,000, and which means that at the end of these 10 years, the book value of the property will become zero. And that is why we have the book value to be zero of this particular vehicle. However, this vehicle can still be useful even at the end of its accounting lifespan. And therefore, a valuer will now look at this asset as having a salvage or scrap value, because at the end of it, at the end of the lifespan, it becomes scrap. And then the valuer will look at this item not as a scrap, but as second hand. It's something that still has utility, that has value. And so the value attached to that at that moment becomes scrap value or salvage value. That's an example of salvage value. And that's also an example of a book value. The accountant can give you a book value to be zero at the end of the lifespan of the asset. However, a surveyor gives you a scrap value, which is what in Nigerian parlance they call second-hand value.
All right, so for example, if we are asked to value a supermarket, that not just the trade or the transaction going on in the supermarket, that includes both the building and assets generally. How do we go about it? Or let's even say, if not supermarket, a filling station.
Thank you. In valuing a property like um, supermarket or provision store, filling station, we adopt methods that are generally acceptable in valuation. Number one, they have so many different type of assets. Depending on the specific instructions given, you are expected to value land and building. You're expected to value the stocks in trade. You're also expected to value goodwill of the business. All these ones, they are the assets and other intangible assets that are considered in valuation. Also, in filling station, for instance, you are not just valuing the buildings, you're also valuing everything that has to do with the filling station operation. You value the buildings, you value the land, you value the forecourts, you value the canopies, you value the deep wells, you value the tanks on the ground. So many assets that are provided there in order to give the general coverage of the assets that are within the filling station ground there. So by the time you have done that, you would have covered everything that has to do with valuing the filling station, just as you value the the market, supermarket, or business operation like that, which will have assets like vehicles, equipment, loose items, and the rest of those things. All those things are considered. And so by the time you go into that, there are various methods we adopt in valuing them. For instance, in valuing the other business, you adopt profit method. But when you're valuing the asset, you adopt depreciated replacement cost, as the case may be. And so all this put together will come up with a very comprehensive and a well-structured valuation of such facilities.
Well, there you have it again. We've learned today the concept of value is important in estate management profession. Then we've also learned the different types of value, and it's important to our daily activities. So if you've not subscribed to this channel, kindly do that. And if you come across the channel and it's not useful for you, or you find it not really imparted, kindly forward it or share it with people that it will really impact. If you have students, estate management students around you, share it with them. They will value it so much. Subscribe to the channel, like, leave all your questions in our comment section. We will attend to them. Criticize us. Criticism make us grow. Please do criticize. Let's know where we are lacking so we can improve. Thank you so much for watching. Cheers.